Okay. So to everybody else, we are rolling right into a power hour trading space. And in case you haven't noticed, the stock market has been insane today. Literally pure insanity. There are names, more names than I actually ever remember in a day that are up over 50% today. I think this is the most short squeezes that I've maybe ever seen in my life in a single day. I'm sitting here, I've got my high volume mover uh, what's it called, scanner on, and I just keep seeing new high on significant volume for every single crap name in the book. They are moving. So we're going to talk about this during Power Hour. We talked about it also earlier. We did a short squeeze central space. It was really fun. We played the squeeze on a couple of names. So I played today on Wayfair is the one that I mainly played. So those did really nice. Those were the $75 calls. Wayfair went up about 10%. And then outside of that, I'm in Hut 8 mining puts. We also played WM calls, which is not really a squeeze. It is all-time highs, though, and a couple of others. But the main ones, obviously, BBBY and Fubo are going absolutely nuts. So BBBY, it was up almost, I think, 80% at one point today. It's now up 35%. Lots of volatility. We brought in Chatterquant, who's joining us for Power Hour to talk about the insanity that's happening. Chatterquant, you obviously have a great model built out to be able to scan for social sentiment, to scan for these type of moves. So walk me through what's happening today.
Well, it's really been, pretty much a tale of the day for, as you said, many different tickers. Fubo followed in the footsteps of BBBY. It's something that we alerted on kind of middle of the week. I think it was August 2nd. We first put out an alert for BBBY, and ever since then, it's just been a slow and steady uptick. And then about Thursday, I think most of the real reliable sources from FinTwit started picking up on BBBY and pushing it out. So I think it was about the $6 mark. We had some real traffic come in. So obviously we had alert after alert for BBBY. Well, the plan, I believe, was to hold that for most people until Monday morning. And then today we really got the move that was anticipated late last week. So we've tapped 2860. We kind of hit that channel for about 3 or 4 hours, stayed in between 24 and about $26. And, I think we're seeing some late profit taking. I was on earlier with Vegas stocks, and she touched on how some action. Sorry about that. Can you hear me? Hello?
Yeah. We
Sorry
got
about that. Alarm went off on my phone. There's been a lot of action on $80 strikes out in January. So we've had a lot of upheaval in this company of late, letting go of the former Target executive, bringing in a different crew, and kind of trying to reconfigure what they're doing. It's kind of a murky future for the company, but if you're following our feed and what we're gathering on Chatterquant, the future is I wouldn't say bright. I wouldn't say it's negative. It's more so just an unknown. But with past movement, I think about a year ago, we played right into this channel where we were in between like $18 and $30, and it's kind of moved right back into that area with similar news. So I think what are we trading at today? 342 million shares of volume movement on an $18 million average. So obviously, a lot of traders for a momentum trade look for 2 to 3x in the first 30 minutes of the day. Obviously, we were well above that in short order, and it's just been a slow grind. Not slow, but a kind of a grind since then. Trying to just keep a thumb on it, and that's what we do. You guys do your thing, put out your predictions, make note of it, and then we kind of aggregate all that data, and we get it out to you based on what our algorithms say it's going to do. So once we move into this, you've got to kind of be responsible your education is key in this. You've got to know what levels of resistance and support are going to play into, and that's where finding somebody like Wolf Financial or some of the other great people you have on this panel are paramount, because obviously we give you the data. It's up to you to have the education to know how to move within this trade. So if you do it the wrong way, you buy at the wrong time, you can really get yourself into some trouble quickly. So that's where our relationship with you comes in so handy, and you are so important to what we try to do, because without you, your word, and your followers, we don't have the information to kind of help our subscribers get the leg up on where the next stock is. And that's kind of, I think what we saw today was a lot of BBBY early success, and that money flowed over into Fubo. And then, as you said, there's been many other tickers that have followed right along, and we're just trying to keep you guys abreast of that. And currently we're looking to roll out we have some new tools that are more institutionally driven, but they work at any level. We're very excited to get those out soon, and we're hoping that, you guys are interested in that. So we want people to move over to our site and check them out, chatterquant.com. Go to our enterprise tab, and we have a brief rundown of what those are going to do. Our legacy tech is still actually functioning at a very high level. It was great during the recent bear run, and it's still doing, it's performing equally now as we come out of it. So we're just looking forward to see what you guys continue to do, and the advanced knowledge and DD that you come up with is what drives us. So that's why we're here, and we're here to support anything that you have to say.
Awesome. Appreciate that, Chatterquant. Thanks for being on and giving everybody a little bit of an explanation as to what's going on with some of these moves that are being made. I see we have a bunch more speakers that just joined up, so I want to start throwing it around. Reminder, at any point, if you want to come in, let's use the raise hand. Also, since it's a power hour, I'm going to ask everybody to keep speaking times to about 2 to 3 minutes. I know sometimes we tend to go on, longer talks, but for this one, I just want to make sure we get it around to everyone at least first. So let's go to Vegas first. And that wasn't like pointed at anybody. That's just happened in past basis. Vegas.
Hi. How's it going out there?
Crazy day. Crazy day.
Crazy day. Market's been great. Make sure everyone's locking in profits, and super crazy on Bed Bath Beyond. That's a great name for the stock, because it was beyond expectations today. So that was really good. So congrats to the mem stock traders, and thanks Ryan Cohen for taking that stake, and thanks to the other news that we had on it today. So yeah, that was a fun one today, and so was Fubo. Fubo was crazy too. So those two alone can make your day.
Yeah, definitely they can. What are you watching now?
I am watching Boeing 175 calls for a reversal here. They're at $1.02. They were 170 weekly. And watching also Fubo, $6 calls, but they're back down to $1. They were at $2.39. So I'm just watching those two. Have a small position in both right now, and just watching to see if they can reverse between now and the close. There's really no reason for the pullback. There was no headlines, no nothing. So trying to take advantage sometimes of some volatility. But again, playing with some profits too, right? It's very small size as well. So those are the only two right now that I am watching and that I'm in.
Okay, awesome. Thank you, Vegas. TSDR, what are we watching? We're playing. I'm sure you've had a busy day. Patrick? All right, I tried. All right, we're bringing it over to you, Matt.
Hey, what's up? He's probably the kids or something. I got in the way. Whenever you come back, Patrick, just interrupt me. Day's really good, right? I shared at the top what my positions are. You guys know me. I notoriously almost never short markets, even in bear markets. I like to find dips to buy. About 2 hours ago, I shorted NVIDIA, Apple, Disney, and Q's, and it's the first short position I built in probably 6 or 7 months. I posted at the top my motivation there. I was long at the beginning of the day, and I'm now short at the end of the day, and I never reversed my position either. I got all the signals to round short this at the end of the day. Not that I'm shorting for the reversal, but every one of my thesis has played out. And I know I keep saying that back in June, we built the case for the bottom for 2 or 3 months. I had that pinned tweet on my Twitter. Market turned around, rallied. I rode JP Morgan, Disney, Apple, NVIDIA. Basically everything I was long, I'm now shorting most of it. So as JP, Disney, Apple, NVIDIA, GM, GE, and Tesla, I longed all of those. I dumped them all on Friday. I made a huge post on how I was done longing the market. And I was going to relax for other things to bring up. We had inflation numbers turn around with a strong jobs market. And the first wave of things that went up was tech. So everybody knows with all of those things together, as I said in my play of the week on Sunday, was that consumer staples and consumer discretionary were going to be the place to go. And Target was my play of the week choice, and Target was the big winner today for that very same reason. If inflation's coming, showing that the numbers are coming down, that's cost push inflation is only curbed by a surplus, which causes natural competition that brings prices down. When prices come down, people are going to spend more money, and they're going to spend more money at places like Bed Bath & Beyond and Target. And I called it last weekend, and that's killing it. And so now I'm looking for other things to catch up while the things that originally rallied came down. So I'm now shorting the things that originally rallied, and those are paying out today. And I'm still debating on if I want to be long JP again. I closed it on Friday, and I was looking at it today and kind of eyeballing it. I think I'm just going to be done longing it, even though I think banking is going to kind of follow suit as the third wave of things to rally before the market finally tops off by the end of the year. So I'd like to say I nailed it like 5 times in a row, but I think I've had probably one of the best at least calls this month on our end. So it's been kind of neat to watch the market flip-flop around like this, but it has not been anything abnormal. Everything here seems to be somewhat logically, I hate to say the word predictable, but logically like bound in a decent thesis if you understand the mechanisms behind the current state of inflation. So I think that Target and Walmart, especially, Walmart had pre-market earnings today. Walmart moved up. And so Target just rallied because it's got its call coming up, I think, in like a day or two, right? Maybe tomorrow. So I don't like the long options in earnings. So I'm not playing Target by holding premium to earnings. I might want to sell some puts once the premium's high going into the call. I'm not really sure. I don't think it's going to be bad if Walmart turned out to be good. Inflation numbers are turning around, strong jobs market. That's economics 101. Long-winded answer. Shit's still going to go up. So still feeling good about it.
Okay. I do remember you using Target as your play of the week, Target long. It made a similar pattern to some of these other high flyers today. Put in the first leg kind of up until around noon, and then stuff stagnated a little bit. Now it's kind of sold off a little bit, similar to BBBY and some of the others, but obviously not as explosive as a move. But I think one that's more likely to hold up long term. We could put it that way. So definitely an interesting one there with Target. We were looking at a lot of the Target sympathy plays this morning. We looked at, we played Amazon like the first minute of the open, scalped that, and then went to Home Depot, which I think was having a really good day last time I looked. I hadn't looked at it in about 2 hours, but yeah, up still 6% on the day. Not something you often see for Home Depot. Walmart had a pretty good day as well. I think we were looking at Walmart calls earlier, but I think that they were the 141s, I want to say, something like that, like right around there. So yeah, there's definitely a lot of interesting plays across the board. Good stuff there, Matt.
Yeah, if I can just clarify, yeah, I agree with you 100%. Like that's those. I think those are some really good plays. The plays that I put, and I know just because again, this isn't trading advice, but I'm always transparent when I live trade. I show everything I do. Don't look at a lot of those strikes, and I think that they're going to happen. The NVIDIA, the NVIDIA 170s and the QQQ 306s are not just striking the money. Let me let you guys know that right now. Those are momentum plays only, and I'm likely to close all or most of them by the end of the day. The other two, I'm expecting to hit the money, so I'm going to hold on to those, and I don't normally hold shorts every night. So don't think I'm looking at a 306 QQQ because this market is still very bullish. So whatever I get today off of that short, I'm probably going to take it on and close it. So my NVIDIAs and my Qs from that post that I pinned at the top, those I'm probably going to close at the end of the day. They're just cheap momentum plays I wanted to grab off of that risk interval bounce that I circled in the chart to the next of it, to the left.
Perfect. Okay, stock market news. Busy day of news for you? Busier? Evan?
My bad.
Yep.
My bad. Yeah, I am here. Actually, last night turned into a pretty big news night with all 13Fs and everything else coming today. And we also had Apple announcing that that they fired 100 contract recruiters, which was interesting. Also was fascinating that they were laid off. They had their badges disabled and were told they needed to email a list of their belongings to Apple if they wanted to see those belongings again. So didn't even let them go in and get them, which was pretty ruthless. But yeah, so that happened yesterday. A couple things from today. We talked through a good amount of them earlier. A little craziness in the meme market, led by BBBY, Bed Bath and Beyond. Looking at that now, but yeah, nothing too much else throughout the day. Don't have really any earnings coming after hours. We'll see if we get any 4 p.m. news done. But yeah, nothing too much for me.
Okay, sounds good. All right, let's see. TSDR, trying once more. Are you back with us, Patrick? Okay, no problem. Michael, after you left, some of these markets decided that it was time to take a breather. So hopefully now that you're back, they're going to decide it's time to continue going up to the upside.
Well, I don't know. The last guest on, I missed his name, not Stock Market News, and one before that is short. So why would we want to root against him? I don't want to root against him. I hope we collapse into the close and he makes all the money. He's short, what do you say? He's short Apple, Nvidia, Qs. Yeah, we don't want to.
Yeah, and I'm notoriously never like to short the market.
How about that rejection off the 200-day on SPY?
Oh, I mean, it's just amazing, right? I mean, I know charts don't work and all that stuff, right? So, but it's just somebody's watching it. Somebody was definitely watching that 200-day. And yeah, I know it's just pretty amazing. I just love having the debate about how, charts are silly, or it's just, this isn't, you can't make money with them, or I just don't understand that. To me, it's, I used to have a very I don't know what word I'm looking for there, but I had a very, I used to dig my heels in and talk about how charts discount everything and all that. And I learned over the years that that's not the truth, or I don't believe it's the truth. Some people would disagree with that and say it is the truth. But it's definitely a tool in your toolbox. And it's not, look, you can go as crazy as you want in learning technical analysis. You can go as deep as you want. You can get into the Elliott waves and the Gann angles and all this stuff, and that's fine. But just basic technical analysis, looking at trend lines, looking at key moving averages, looking at patterns, and just using that part of your toolkit with everything else, it's just so valuable. So again, no surprise that the 200-day held. I didn't think it would get a rejection that strong. I'm not going to sit here and hindsight that and say, oh, I knew it would come off that high. I didn't know for sure. I still think that before it can get above it and really stick above it, it has to do some basing underneath it. It has to build up the power to actually break through it. So we'll see if that happens over the next several days. In this market, the next several minutes, I don't know. I mean, right now we're popping again here, so I don't even. We're still down, but we're trying to pop out of this after hitting the low right after 2:30. So I don't know if this is going to fail and we're going to go back to the lows. But, let's see what we do over the next few sessions around that 200-day moving average. That's where I think everybody should be focusing on and everybody should be watching, because the institutions are going to be watching that. Anyway, that's what I have to say about that. I'm pissed off that Bed Bath & Beyond did not hit my 30 target. I'm not in it, by the way. I just gave it just a general, hey, it's going to hit 30 before lunch. And then I just kept saying, well, in California, they take lunch at 3 o'clock Eastern, so maybe it'll hit by then. But no, it wasn't the case.
Good thing charts don't work, though, right?
Yeah, it's a good thing. I mean, it's a good thing that I put all this time into learning this stuff and fiddling with I say I have a trend line fetish. I always like to draw trends. Every chart I have to draw a trend line on every chart I see. So, yeah, it's just amazing that they don't work. Anyway.
Love it. I'm a little sad I didn't take these Carvana puts. I'm with you, Matt. I think some of this stuff is going to sell off into the close personally. Some of the high flyers, that is, the ones that just threw up, a 10% day kind of with no reason, right? Like, why did it throw up a 10% day? Because people pumped it. Why is it going to sell off into the close? Because they're taking profit, right? There's no like fundamental involvement in this. All right, let's keep it popping. All right, so TJ, I know we just did the other space. If you have any stock thoughts, I'd love to hear them.
Yeah, for sure. So this morning I played Shopify, just kind of telling, off of Walmart retail earnings, looked like there was some strength in retail. So I kind of played the e-commerce a little bit, played it up to the $40 level. Shopify has kind of been basing out for almost a whole quarter now between like 30 and 40. So saw it kind of give a nice pullback to 38, caught longs off of that. Currently looking at Coinbase. We're seeing, BTC and ETH struggling to kind of hold those weekend gains. Coin looks to be in like an interesting little, we call it a bull flag, but it touched the top of the channel this morning, and it's kind of sold off for the rest of the day. So looking to see if we kind of hold 90, or if not, we'll probably kind of come back to test the bottom of the channel around 81, 82. So watching that. And then lastly, I had a really interesting small cap ticker come across my scanner, which is CEMI, Kimbo Diagnostics. This morning, they talked about possibly being able to have a rapid test for monkeypox. So we saw SGIA kind of run really crazy when they had the therapeutic TPOX over through the beginning of the year, and CEMI has a similar type of setup. So kind of watching that to see if we start to see some activity start to flow into there. But other than that, kind of share some of the same sentiments as some of the other speakers this morning. Not thinking that we're going to, pump in the close. I do think some of these names are probably going to end up selling off. So kind of keeping position sizing, so just taking what the market gives me.
Yep, I think that makes sense. And there's definitely no need to. My position sizing has been very small today, I will say. Very, very small, especially when you're getting moves like this in one direction or the other. It's not the type of day where I'm going to come in with something big. So I definitely agree with you on that, and appreciate you sharing the name as well. All right, let's take a look through. I'm watching Coinbase here as potential calls going. A lot of stocks got pumped today. Coinbase typically gets some type of pump, but just didn't get it today. It was up 3% at one point. It's down 1.5% now. It was down 8% early in the day. So it's kind of been all over the place. It's one that I'm watching. It didn't make the move last week that all the miners made. It's literally flat in the past week. It's up 70 cents. It obviously had a big month, but I think there's still potentially some room. So still watching Coinbase. Have not entered a position right now, but if I do, I'm watching the, I think like $92. I don't want to go too far out here. Maybe 93 if I was being a little ballsy. It's trading at about 90.5 right now. So the premium's not terrible on the 92s, 93s. So it's like $3.50, $3 around there per contract. So it's looking interesting. All right. We can keep hopping it around.
Scalping. Yep. I took a trade on Target. The Bollinger Bands are getting really tight. On the 200 calls, they're 150. So I took it here at 147. They're not moving yet. They're around like 149. So I took a small size. Stop under 172.31. But we're far from that. So think I will swing this actually on Target.
Okay. There's a trade on Target for y'all. Let's see what else is going on in this movement. So yeah, I'm seeing mostly stuff just running down now. Fubo, IDYA, BBBY, APRN. I'm getting all notifications of them running down. IonQ as well, I think, is taking a little bit of a breather here. It had a pretty solid day. I think it's up about 33%. We found that one very early this morning. It was up about 5 to 10%. ARTL is one still watching kind of in this area. Mind you, all these are just, again, it's quick scalps. We're not looking at, there's not too many fundamentals that you're trading through these. You did hear more plays if you want to stick large cap with like Target there, you was just giving out, and there's a few other large caps that were given out. Let's see. I'm just watching these Wayfair calls. No, they're not doing much. Okay, so we're kind of like just traversing here for a second. So again, I'm just going to kind of throw it around. Chatterquant, what other names are getting alerted across your scanners here going into the last 30 minutes of the day?
One moment. I am running that right now. We are looking at... Sorry, bear with me. We have PRTY on a momentum alert, SPX game, GME. See here. GME, yes. Microsoft, MEGL, and PRTY again. That seems to be getting a lot of discussion and a little bit of momentum. CNGT as well. So I'll go over those again. PRTY, SPX, GME, ES, Microsoft, MEGL, and again, PRTY seems to be picking up some pace. As far as options go, we have, hold on one moment. Just clearing that up. We have alerts, BBBY coming across, TGT, PLCE, XOP, U, BBBY again. That's a put. So we have mainly calls. Calling BBBY, 4.6 million.
BBBY, by the way, giving it all back right now.
Yes,
they're down to. I mean, they're still up on the day, but up 16% from 75.
Amazing. So yeah, that's what's coming across the alert right now. Pretty steady, about what you'd expect. I believe it was Matt touched on consumers. That seems to be the tone for the market today. But yeah, that's where we're at this moment, coming across. So if you want me to go over them again, I can. Again, that's PRTY. Party City seems to be grabbing some momentum here, and I know that has not been mentioned on this Spaces yet. So that's the one that we're giving away for free today, apparently.
Yeah, PRTY. We didn't when we mentioned it a few times on our 10:30 space.
Okay.
Yeah, that was definitely coming across Party City. I mean, it had a nice run up. It's an interesting pattern. I don't really know how I'd go about playing it. It dropped down like some of the others, but then tried to retake back up to the highs, and it's basically just trying to hold $2 right here. So it's sitting at $2.04. It's been all the way up to about 223 today. So we'll see where it goes. It's kind of also putting a little bit of support in the 195 range. So it's just kind of in between there right now. But I'm not going to come in and take a position on it at the moment. I think it's a little bit risky. And there we go. There's Sim. Perfect. Getting Sim up here. But yeah, PRTY, I want to keep on the radar. But yeah, insane to see BBBY just giving back all the gains, really, and some of these others. We'll see. I mean, imagine if you played, calls the way up, puts on the way down. What a day. All right, Sim.
Great. Thank you.
Yeah. Sim, what's going on? Hopefully spaces are working here.
Dude, this thing sucks. Can you guys hear me?
Yep.
Oh, sorry. I heard my name. I just heard my name. That was it.
You're good. I just wanted to see kind of what you've been trading since the morning. Still annoyed that we cut those SPY calls. But
yeah, dude, I made up for them pretty nicely. I took a put position right at the top. My level of rejection was 431.8 on SPY. I took it a little bit early, and then I rode it all the way down. So that was a big play. My runners hit like 1900%. That was nasty. But other than that, I was paying attention to HD today. Super strong after ER, and then I was looking at potential for some target earnings. Not really interested in fully taking a position just yet. But if I was gonna take it, I know that their implied move is about 6% or so. So I was looking at that, and then I was looking at some end of day SPX as well for calls. we bounced pretty heavily off of that 428 area, and that's ideally what I wanted to essentially break for more downside, and we didn't. So holding that level, holding really, really strong, those bids came in really hot. So I think that we'll see some upside in the interim here. Really want to be able to clinch 430 again, and then get over that 430.65-ish area. And then we may be able to see a potential upside. We went red for a little bit, only to come back green. So and tape looks freaking fantastic right now. So a lot of nice buying at the ask and above the ask.
Yeah, I actually just saw that SPX stuff. I love how you're like 100% still holding, 200% still holding, 400% still holding all.
Yeah, man, it was and that all came from what I saw. Like I saw the bids flushing aggressively, and like I mean, there was no way that I was gonna not let go of it at 300%. If you see it, it's clear as day. It's right in front of you. You see that the bids aren't holding, and you see aggressive selling pressure that's coming in at that same time. All those executed orders were all coming in at the bid and below the bid. So ideally, I was watching more of a flush than anything. Yeah, I held the shit out of that, but it was fun. But yeah, I mean, in the interim, again, I'm a scalp trader, so I'll take whatever the market provides. So in the interim, I still think that we may be able to clinch this 430 and see more upside and close green today.
Okay, sweet.
Got taking out AMD 102s at $1 weekly reversal in play. And it could be a scalp into the close on AMD.
Yeah, SPY flipping around here like you were just saying there, Sim. So AMD, what's the play again? Vegas?
The 102s, they're $1 or like 99 cents. They were 170. So looking at from a reversal play here on AMD.
Okay. I see them. Yeah, we could take some questions. I'm bringing someone up, see what they say. Yeah, a little SPY reversal here. Looks interesting. Just kind of flipping through some of these other calls. Glad I sold most of the stuff that I did. At some point during the day, it just gets a little monotonous and things just start to give back their gains. Action CO, what's going on?
What's up, man? With all these gains, here's a basic question. Are we looking at a emergency Fed meeting or not?
This I doubt. I think there's already enough Fed speakers this week anyways to probably calm the market back into submission. But I don't think people are going to go too crazy with with what happened today. I think it's going to be like it happened in the past, right? You get a day, week maybe of these things. A lot of them sell off, right? They crash back down. Retail gets hurt ultimately. Some learn their lesson, some don't. I don't think that the Fed's going to call anything for an emergency, though. At least not at this point. If a lot of these stocks start running like 1,000%, maybe.
What? I'm sorry. An emergency rate hike? Is that what he was asking?
I think so.
Yeah. No. There's no what. No, they don't do that. The only thing they do is emergency rate cuts, and they're not gonna rate hike this. There's no urgency to do that ever.
This low roll.
That's good news.
Sweet. Hey, Kyle, I see you in the audience if you want to come up, just request. While we're doing that, Mickey, what's going on? I saw you requested to come up. For the love of all that is good, Mickey, ask me your question.
So BBBY, that's been an absolute ride. I started trading 2 weeks ago, and I'm up like 400%. So yeah, blow my mind. I don't really know what's going on now. I mean, dropping $10 in the space of a couple of hours, crazy, and the volume just through the roof, isn't it? But yeah, interested to hear your input, brother. Thanks for inviting me up.
First off, great accent, appreciate it. Second, yep, BBY, definitely going crazy. Nice job there, catching the max of the move. And appreciate you tuning into our space. I am going to move you to make room for Kyle in a second. Any other comments?
Sure, bye.
Brilliant. All right, let me go ahead and just Make some moves here. Thanks, Vegas. Appreciate the reaction. All right, Kyle, what's going on?
What up, dude? How we doing?
Pretty good. How
I'm
about
good,
you?
man. I'm in Chicago. It's been a pretty crazy day for me. I'm usually based in Miami, but I've been out and about, running around for some meetings. And yeah, it's been an absolutely crazy day. I remember I was trying to trade some BBBY options back maybe 12 months ago, and back when kind of GME was pumping and everybody was trying to scalp all the different super highly shorted stocks across the portfolios. And of course, you try to get too smart for the market, and I find it pretty funny that good old Ken Griffin made his way into the top 10 largest holders of BBBY and ripped a fat gain today when everybody else is trying to crush the short squeeze. So I guess it's more of an indication that these big hedge fund guys always kind of win, and don't try to outplay them sometimes at their games. But it's pretty interesting market right now. I mean, I feel like it, and maybe this is just me being a skeptic, but it feels like a little bit of a false rally right now. I just don't really feel, I don't have quite the technical analysis expertise that some of the people on this panel do, as I'm a little bit more of a founder than I am an investor. I certainly use my own assets and like to go long on things, but mostly from a swing perspective as opposed to doing shorter term things. But I don't know. I'd be interested to hear what the panel thinks about how liquid these markets are, and if it's just kind of slush money bouncing around, or if we really feel like this is a potential turn in the markets. I haven't quite seen enough in actual balance sheet performance from a lot of these companies to suggest that things are economically incredibly healthy. But I'm definitely open to changing my mind on that. I'd be interested to hear what either what you think or anybody else. Certainly seeking alphas here and stock market news, whatever you guys think. But I'd be interested to hear what the thoughts are around our current market health.
Yeah, first thing I'll say is, you want some BBBY regret? I was trading BBBY 4 days ago, and I was trading the $12 calls at 37 cents.
No.
They're currently trading at $8 per contract.
Oh.
Yeah, and
Ouch.
I sold them. Sold them last week. So,
Oh.
yeah. There's some regret. With that being said, I think that there's some comments on your point. I'll drop it to Matt, and then I'd love to hear Michael's thoughts as well.
Yeah, absolutely. I heard questions about liquidity in the market. The market is in a very strange dynamic. As the bear side of what we're experiencing, or we say the bear side of experiencing, what ended up happening, and you can see this very evidently in this futures market, and I'll just give the brief version, was when the first round of COVID happened, right? Everyone shorted the market as it was coming back up, expecting it to have a second and third yearly wave that's going to cause additional shutdowns, plus switching regimes from a Republican to a Democratic president enhanced the odds of a second shutdown. And every hedge fund in town was betting, well, the Dems pressured Trump to shut down, so now they're in office, we're clearly going to shut down. It was the biggest short on Wall Street. Everyone took it. And even in spite of all the bad fundamental data, QT rate hikes coming through, there were enough shorts getting squeezed out of COVID over the course of the year that even the asset managers that started dumping in July of 2021, the market still rallied against their dumping to the market for like 3 solid months. The reason the market rallied at the end was because of squeezing those 2-year-long COVID shorts that really got squeezed because the vaccine came out. So the market had an insane amount of liquidity at the top, to where we were able to stave off this nasty fundamental data that we have, because there was enough buyers of people still getting out of 2-year-old shorts to really give liquidity to the people selling into the bad fundamentals. The market has been surprisingly liquid here, which right at the end of May, we called a bottom because of liquidity. There was nobody left to sell, and everybody was starting to buy again, and the dealers are holding all the bags. So essentially, we've dumped everything to the market. The shorts that were getting squeezed got squeezed, and now the market's just kind of sitting at a low, and the big banks hold all the inventory. It's the perfect recipe for liquidity, because if you hold like every last Beanie Baby in town and you own the market, you would set the price whatever you want. You wouldn't devalue your own assets if you're the only person that held them. So the capital rule of Wall Street is the market don't fall till the banks are short, and they are so long right now. They've never been this long in the history of the commemorative traders report in the futures market. It's the longest they've ever been, the least non-net negative position of dealers. They've got so much bag in their pocket, they have no incentive to drop the price. That's why it's such a strong market. They're going to stimulate liquidity right now by raising price and pulling in late buyers that want to get in and have something on their books, which is exactly what we're doing right now.
And do you think that's going to hold long term, or is that just kind of the short term, pack your books for the end of the quarter?
That's bad. Basically, at 1 to 2 quarters, he nailed it. As that's how I feel. Like quantitative tightening will eventually take over, right, and start to destimulate the economy. But it's also going to be fighting against the surplus we're seeing, like in supplying the market with materials, right, and products that people can actually purchase at a lower price because the surplus is bringing prices down. I tweeted over the weekend, I went to a Micro Center, right? There were like 500 3070 and 3080 Ti graphics cards literally stocked. They were stacked to the roof. And I made a joke like, chips, what about that chip shortage though, right? So the idea is that we are producing so much stuff now that I think that the prices are going to come down. And that curb to inflation is what you're seeing now that's creating a little bit of buzz, right? People are buying because Wall Street likes to get ahead of the good stuff on rumor. But the bad stuff eventually will take over. This momentum on this rally could probably last 6 months. It could last probably till the end of the year. I don't think it's the mechanism for a breakout to break highs and keep going, because eventually, fundamentals almost always win at the end of the day. They're just not priced in fast enough like the hype is on inflation numbers curving around, right? This is really the one bad metric we have besides QT. And it's a little immeasurable on how quickly QT acts. And a lot of the smarter people out there that I listen to that inspire me every day are talking about QT as a 1 to 2 year thing that's going to kick in slowly and gradually. And we're just going to start seeing the market just slowly and mysteriously feel more bearish, even though everything looks bullish around us. And that's what QT will feel like. So 1 or 2 quarters, right, to kick the market back up. And then maybe the next year it starts to kind of slow down when there's, this first wave of buyers sits back. And, QT starts taking over, and you start to see that productivity decline and things like that. They really bring the slower moving ship of fundamentals, bringing the market down that way. So I think 1 to 2 quarters up, maybe 1 to 2 quarters down, something like that. I don't know.
That's really interesting. I think that your point of because we're producing so much, it's almost like the production of real goods and services has much higher momentum on either side of the equation than actual buying demand, right? So from a creating of 1080 Ti's or whatever you want to say from a silicon-based microprocessing plant in whether it's Taiwan or it's somewhere else, that facility is going to be pumping out 10,000 graphics cards a month or a week or a day. I don't even know what their production stats are, right? But they're gonna keep doing that. Whereas buyer demand may wane very drastically in a short period of time, and they're still going to be pumping out that same level of inventory. On the other side, you also see it, right, where it's hard to ramp up production in the event there's a drastic spike in demand, which is what we saw. And I work in the blockchain space, so seeing the miners, I'm sure that on the stock call, a lot of you guys have seen the miners have just been getting absolutely blasted on the public markets, Marathon, Riot, some of these other publicly traded companies that are just getting roasted on a lot of their fees and expenses to maintain their infrastructure. With that becoming a less popular demand source for silicon-based chips, especially as you see Ethereum, the number 2 largest cryptocurrency and the second largest demand from a mining perspective on the cryptocurrency industry, that's going to be changing to proof of stake in September, which is going to significantly drastically reduce the demand for processing power with regards to cryptocurrency mining, which is going to bring down demand. But it's unlikely that Taiwan and a lot of these semiconductor manufacturing plants are going to stop producing, because that's such a large portion of their net exports and of the demand internationally for a lot of their trade from a geopolitical perspective. And obviously not trying to get into that conversation today, but those are very important macroeconomic factors that are to be considered, even from a commodities perspective, looking at the demand for futures of delivery of lithium, of silicon, of some of these different rare materials, potentially as demand begins to slow and we see stockpiling of some of these assets, does it have an impact on some of these companies that are either directly producing these materials or ancillary players or tertiary players to this manufacturing process? How does that affect Qualcomm? How does that affect Samsung and others?
You nailed it. You absolutely nailed it, guys. Listen to what he said. See, what happens is there's going to be a surplus of overproduction, right? And you're going to have demand growth will slow, and the demand will slow. Once the market becomes saturated, it will turn around and go the other way, because companies have to now decide, are they producing much with such low margins? Like the graphics cards, you just can't stock a store any fuller than you can. And so prices will come down to the point that the margins are no longer worth ramping up production, and companies may slow in light of quantitative tightening because of demand slowing as we add a demand relative to the amount produced. So companies may have to, like, they're overproducing now, and demand is going to gobble up all the cheap stuff till everybody has a graphics card or whatever it is they want, and then all of a sudden you swing the other way. So it's like oscillating. There's first a shortage, then a surplus, and it's going to go back to pulling back towards not shortage, but less of a surplus, right? So prices are going to fluctuate for a while. This is a big swing the other way that could happen, especially with QT, right? We can have companies probably laying off again when the market seems healthy, because they're just producing into a wall and stack of like produced goods that they're not being sold fast enough. So you're exactly right. When that demand growth starts to slow, that's where the economy starts to slowly and strangely, or the market goes the other direction, and you're like, why is everything looks healthy? Market stock, the grocery stores are full of food, low prices. There's a literally stacked graphics cards to the ceiling. I mean, there's so many cars, so many houses. Like, why is the market pulling back? It feels like a surplus, right? Things are going up. It's because if you make anything as a company, you have to make that decision. Ooh, my margins are really small, and now I have all this overhead, and now I'm by making all this stuff that I can't sell fast enough. And then what happens every year, you got to get rid of all the cars to make the new model. Every year, you got to get rid of the new graphics cards to make the new model. You can only produce as fast as your technology improves. And that limiting factor, when that demand comes down, you might see some companies hit a brick wall and decide, ooh, we're going to cut production 20%. And Wall Street will hit that really hard by selling those companies, right? So that's where I'm going with that. Because, how many car companies want to have 50% extra surplus of 2022 cars when the 23 models are coming out, because they made so many? And that's what you have to think of in the reverse direction, by producing a surplus of goods. And that's exactly what will happen. You're right. You nailed it.
Michael, any thoughts on that topic?
Not that's already been covered. I think there's plenty of liquidity here. And I do agree that this bounce, I mean, while I think it will at least, we really need a pullback here, in my opinion, just to get the people who missed it a chance to get on board. But if they FOMO here and they just start chasing, this could get a nice squeeze here. And I'm talking on the daily time frame, not intraday here. But I don't. That's not the way I usually see markets. So I usually see them as thrust, pause, pivot, continue. So if the bear is really done, and S&P hasn't come 20% off the lows, blah blah blah, but the other stuff has, the Russell and the Nasdaq. We could absolutely see this extend. We could go to new highs before the end of the year. I mean, when you think about it, it's not really that far off. If these fund managers and they're usually behind the eight ball anyway, right? Because 90 whatever percent, whatever the stat is this week, don't outperform the S&P anyway. But if they have to play catch up and they have to come rushing in here, I mean, really not that much to swing back up towards the highs. So again, I'm not bullish here. I'm not like super. Hey, that's it, we're done. But you definitely have to put it into consideration. I just think we're due a pullback. I think it should come sooner rather than later, and I think that pullback is what we need to make judgment on, right? Like it's easy to make judgment now on this rally, right? Oh, look at this push, it's great. We're up to the 200-day moving average. That's fine, but it's gone now, right? What we want to see now is what happens on the next pullback. And yes, we will have a pullback, right? It's 100%. I mean, I guess I shouldn't say this, right? Because that's I'm making a guarantee, right? But we have an extremely high likelihood for having a pullback eventually, right? And that next pullback, that's what we have to watch. Right? I'm more focused on watching the pullback than watching this rally. In my opinion, the rally is overextended. We're running into resistance here, and I would not be surprised to see us pause. But right now, I'm off the soapbox, thinking, this is BS and this is nonsense, and we're just going to go right back to the lows. Yeah, I don't believe that. So the next pullback is where I'm going to be putting most of my focus on and trying to figure out what we do from there. But yeah, there's plenty of liquidity here. There's unusually good volume for August, a lot of vacations and everything. You can see like the Qs and the SPYs, their volume is declining, but total volume on NYSE and NASDAQ is actually up from July. So far, so good. And so far it's acting well. So we'll see what we do from here. But I wish I could get more specific on stuff, but I just don't. I think we've gone up farther than a lot of people have expected, myself included. So can get really dangerous trying to pick the exact top and the exact low as we've seen.
Yeah, when you speak to a pullback, is that you're saying mostly in like large cap and the indices, general market pullback?
Yeah, I'm talking general market pullback. But if you want to go to individual stocks, I mean, we can look at some of them. Like Apple is ridiculous, right? Apple is and I don't mean ridiculous in a bad way, right? Like, of course, it deserves what it does. It's a cash gushing company, right? Makes a ton of money and is the number one brand, number one electronics brand in the world. I think the number one brand in the world is McDonald's, but that's another story for another spaces. But yeah, I think that like a stock like Apple, yeah, I want to see what the next pullback brings. Because I don't know, is it going to just go right up to new highs from here? Probably not. But yeah, I'm talking more about the overall market, the NASDAQ, the S&P. I want to see what we do when we pull back there. Because that, in my opinion, is how we're going to judge how much further we have to go here.
Okay, perfect. Got it. Thank you, Michael. TJ, I see you said you're swinging a couple things. Want to give us levels and reasoning?
Yeah, so I'm looking at Coinbase, and was watching this $90 level in which Coinbase is trying to hold, but just not seeing a lot of buying volume stepping in there. And for those chartists that love patterns, this is looking like a nice nice head and shoulders, right? Head up 95 and shoulders at 91 respectively. So looking for a breakdown of 90. I think we might gap down tomorrow around $88. So 88, 87 is around my target. I'm looking forward to the downside on coin. And then looking at Exxon, I've been watching crude oil pretty closely because a lot of people have been looking to go long on crude oil and energy names. But, crude oil prices are just not showing that level of demand as they were earlier in the year. And we really just lost a pretty key level around $87 today. So I'm expecting might be a little bit of capulation in the future oil market to see a little bit push lower. So I'm going to kind of play, some of the larger oil names like Exxon, playing it a little bit to the downside back to around 90 or so dollars. So nothing really long term, but looking for some short scalps in coin and Exxon.
Yeah, another day of weakness here in Exxon. I hear you. Coin, I think, is interesting. I understand the puts, but
Yeah, I heard that you were thinking the long, and I could see the long argument as well. I think it could go either way. So, with anything that I call out or anybody that calls out, you will always have your own risk management that you play. Again, Wolf said it earlier. I'm really small sizing, so if it does, if I wake up and coin gaps up, then it's not going to blow my account. I'll cut and reposition. So, I think I can see arguments for both sides too.
Yeah, it's definitely been interesting. One of the other things that stood out to me about Coin was there was more insider buying this week. I think it was. Let me see. I'd have to look more into like who this actual person is, but it did look like there was a little bit more buying going on by insiders. Although that doesn't necessarily mean a huge thing. But yeah, for me, Coin just consolidating here in a nice level right underneath the Anchored View app from year to date. It's just been sitting there for a while. And, and it makes big moves on the daily to the upside downside, but it stayed in that range in general. And what I'm looking for here on Coin is a bounce off the 10-day SMA. So we pulled back to the 10-day, which I think was healthy because we had that big run up for a few days. And now we just hit it today. Today's the first day that we're really kind of sitting on it. And we're also sitting on the 5-day as well. So if it can push up, I like Coin once it gets through 93.04. It's really the level that I'm looking for. But would love to see it like solidify itself through that level. All right, we got about 3 minutes to market close. If anybody else is taking any trades, Vegas, anything else you're putting on? Or Sim, anything else you're taking into close?
No, well, the ones I have, I'm going to keep them because they haven't really done much. So, and I have a lot of good money today from BBBY. I did take a Carnival Cruise Line swing trade. I just want to mention that one quickly. For September on CCL, in the money, $10 calls. And they also had news today on CCL. And they did mention that they're obviously removing their pre-vaccination requirements for testing. And they also said that the booking activity was double the level for the equivalent day in comparison to 2019. So that was I thought, significant news. And we've had a lot of money flow dark pool coming in on CCL over the last week. So this is probably primed and setting up for a move to the upside, so long it doesn't go under that level I have here of 950. So CCL is looking like it wants to eventually sail away to the sunset. So looks great. And we'll see what happens in the next couple weeks because it's going to take time for the move. It moves a little slow, but it looks really strong.
Yeah, I read an article on Bloomberg this weekend about how cruise lines the bookings were coming in so strong. The only downside is they have to get rid of the 24/7 pizzerias, unfortunately, because they can't staff them. But as far as people wanting to go on the cruise, there's a huge demand for them. So I guess you take the good with the bad, huh?
Yeah, I agree with that. TSDR, what's going on?
Hey, sorry. I know I heard you calling my name earlier, and I couldn't respond. I apologize.
All good. How's it going?
Where were you? With the kiddies? How the kids doing?
No, I was with the kid. They were doing good. They're doing good. They were asleep, and then they woke up, and I was trying to make some trades. It was a whole thing. What are we talking about? Are we talking about stocks? Are we talking about the market?
Usually we do that here. It's not occasionally.
Oh, cool. Just making sure I came to the right place.
Welcome to our book club.
Yeah, we just finished reading the Joy Luck Club. It was lovely.
On page 69, you'll see. Anyways, the market's closed now. At least I got one good trade in midday to kind of take me back to green. I ended up putting a trailing stop on that would keep me green, trading my P&L, trading my hopes and dreams instead of trading the chart. But no, it was good. I had a little bit of a tough morning. Not even tough morning. It was just frustration. That's the only way I can describe it. just keep going up, keep having these midday squeezes. If you go look at the 5-minute chart of either Qs or SPY, for the past 3 days, well, I guess so Tuesday, Monday, and today, Monday, and Friday, at like 11 o'clock, between 10:50 and 11:15 a.m., all of a sudden, out of nowhere, we just spike up, not even touch the moving averages on any sort of retracements, and just go straight up for the rest of the day. Maybe giving like a little bit of like 2 candles sideways for a possible little like flag entry or something. But other than that, it's just been straight up, and it's been so frustrating. For me to capitalize, I let the kind of the first move occur, and then I wait for like a little stalling or hesitation, and then I hop in for the trade, and it just hasn't been happening. So I've made like 2 or 3 trades each day for the past 3 or 4 days, and it's just been kind of frustrating. And then, if I'm taking more than that, I'm kind of forcing trades that maybe shouldn't be there, or that are, maybe lagging a little bit behind. And then, they're actually showing relative weakness, not lagging behind. Oh, but it was frustrating. Got lucky. I mean, I got to call it lucky on an SPX trade in the afternoon. I saw those topping tails on the 5-minute chart right at the 200-day moving average. I said, screw it. I'll take a few puts, just one strike out of the money. And then I don't know what the hell happened. We just ended up taking a big old dumper, and those contracts appreciated really quickly and brought me back from a pretty gnarly day to essentially flat, very, very slightly green, which was pretty cool. So I got bailed out a little bit by that, but I'm gonna try to work some things out tonight to get my head a little bit straight. I know we're up like 340 days in a row in the market, it feels like. So hopefully we can, get a few days of pullback or consolidation, let some of these charts reset a little bit, give some levels to trade off of, and so we can go into the rest of the week, next couple weeks with some good locations on some of these charts. That's what I got. That's my vent. That's my Festivus, my airing of grievances for the afternoon.
Well, I appreciate you sharing with us. And I think, to a lot of retail, they only see our wins. So it's probably helpful to people to hear, about the ups and the downs. I think it goes a long way for a lot of them who, maybe looking to get more into trading. So yeah, I appreciate you sharing it with us. And certainly there has been some crazy moves during these days at the 10:50, 11 a.m. spot. We were live today and definitely saw that. All right. I see Andrew joined us as well. Andrew, I would love to hear a little bit about what you traded today and how you're positioned. And I'm still holding those hut puts. They went up a little bit today.
It's your dog barking at also.
Sorry. Yeah.
Is someone outside?
No, my dog barks at whatever the fuck she wants to. I have no idea.
Hey guys, what's going on? Yeah, I'm still holding my hut puts as well. Yeah, those mine are marking at like almost plus 20% today, which is pretty good. Yeah, today I actually spent most of the day just observing this crazy tape, and then I've still been adding shorts. So I went flat the market about Friday, and I started adding some shorts. I believe it was yesterday, and then today I just kept lathering on the shorts, man. Like one of my models flagged an overheat setup, and then sure enough, we got even more of these like meme squeezes today. So I was actually short AMC via some put options today, and I thought the apes were just gonna like completely obliterate me, but it ended up working out. So like my big short that I have on right now is the small caps, and there's like a variety of reasons. Honestly, like we have, what is it? We got options expiration on Friday. We have the quantitative tightening program is going to double in a few weeks. We have some weaker seasonality in September. I'm noticing as well, I keep a list of leadership stocks. And today, if you look at under the hood of the market, it was not the leadership stocks that were really carrying the market. Everyone's rotating into consumer staple stocks, like Walmart was like the big contributor for the S&P 500 today. And they're also moving into those meme stocks. And today, pretty much like the lights went out on some of those meme stocks, where I just know that there's those poor location longs out there that I think the next phase in this sequence is barbecuing some of those poor location longs. So yeah, I'm still just playing some shorts. I added a short in DraftKings today.
you got to come on before 4 p.m. so you could tell me the puts that are in place so I can take these. I can't take them after 4, my guy.
Dude, the market started moving so quickly, and all of a sudden I looked up from my screen and I was like, holy crap, it's already 4 o'clock. My bad.
Oh, good. Some interesting put plays then. We got this like big run up and jump today. Are you concerned in any of the ones that you're in that there could be similar type squeezes?
Yeah, the only really low quality, or I guess maybe it's not even the worst, but AMC, I have some October 21st 22 strike puts. I got them for $4.90. Right now they're marking at a 7.65% loss. But at one point during the day, AMC went up like 7%, and I was like, oh gosh, they're gonna posterize me, aren't they? And it ended up settling out only up like 2.5%. So honestly, like when I look at that chart, it definitely looks pretty strong, but I am noticing that a lot of times when the name rallies, the tops of the rallies are getting sold. So yeah, I just think like when you zoom out to like a weekly or daily chart on a lot of these indices and a lot of these stocks and all that stuff, like this thing is just pretty darn extended. I guess it could just keep going, right? But yeah, the probabilities right now with my system are telling me, hey man, you only get this short setup like, a few times a year. So I'm really just pressing it. We'll see.
Absolutely. Yeah, I hear you. Well, definitely keep us in the loop on some more of your plays. I don't know if you're able to drop any of them into the Spaces chat, but would love to have the opportunity to look at them later.
Can I ask Andrew a question?
No, I'm just kidding. Go for it.
Hey Andrew, when AMC today, so you put those AMC puts on a few days ago or recently?
Yeah, I put them on yesterday.
Nice, sick. Hey, just a question because I'm the more degenerate weekly or next week's option. Those October puts when AMC pushed up, how much were you down at that point?
Dude, what's weird is the volatility's holding in. So even when AMC was trading on its highs, I was maybe down like 11% or so on it. Like it really wasn't all that much.
Nice.
And right now I'm sitting on like a 7.65% loss. It's basically just like, it's basically anyone's game right now. We'll see what happens.
Cool. Thank you. I like all those ideas. Oh yeah.
What was the other piece? I feel like there was something else that I was looking at. So just to kind of be correct, are you? I saw Andrew. You kind of took both sides. It looked like you had IWM puts, but that you were also long QQQ. How exactly does that work?
I shorted QQQ as well.
You were long the puts for QQQ. My bad.
Yeah, so right now I'm long puts in S&P 500 small caps. I'm long some VIX calls. I'm long some AMC puts. I'm long some DK and G puts. Like I'm pretty much just like lathered up. And yeah, we'll see what happens. That's like part of trading. You put your risk on, and it can go well or it can go poorly. So we'll see.
Yeah, some good ideas there. Okay, awesome. Thank you, Andrew. I feel like I had another question, but if I remember it, I'll bring it back. We've got another 21 minutes here. I definitely like the back and forth that we've gotten. Let's see. Sim, anything that you're watching for tomorrow? I don't think that you swung anything, right?
No, I'm not swinging anything overnight. I was going to watch Target earnings. I don't know if you guys have those up right now. Is it today or is it tomorrow? I thought it was. Actually, I think it's tomorrow.
I think it's tomorrow morning before the open.
Yeah, that's what I was thinking. Okay, cool. Yeah, I didn't end up taking any. I was gonna right before the close, but I didn't. I think they're expected like 6% move, implied move. But yeah, I didn't swing anything overnight. I was actually looking at taking SPY puts if we had dropped underneath that 428 level, but we held pretty strong off that little double bottom on the 5. So not taking anything into tomorrow, just sitting full cash position.
So, okay, interesting. Got it. Hey, real quick, Evan, did you see the tweet I pinned up top? Did you see Kramer's BBY tweet?
No, I didn't, but that's pretty funny.
Yeah, so Kramer tweeted and said, I keep hearing that Bed Bath & Beyond is the next JCPenney, blah, blah, blah. And then he said the same store sales were down an astounding 27%. He posted this on August 10th. And then he actually deleted the tweet. So Bed Bath & Beyond went up. I don't know what it was. Probably a couple 100% since August 10th or something like that. When was it, 10th? Yeah, at one point today, it was up 160% or something since the tweet. But Kramer still has his other tweet up where he said selling 10 million shares or sell 10 million shares of BBBY here. That was also like back on, 10th or so. So there you go.
It's still to be that wrong that consistently as Jim Cramer has been over the last couple of years. He's kind of like Scott Galloway. I feel like you can just kind of trade the opposite on most of his terms. But what do you make of Ryan Cohen being a big shareholder in BBBY now? Did you guys talk about that at all?
Yeah, Vegas mentioned it. Vegas, you seem to be a fan of it, right?
Yeah, I love it. I love actually Ryan Cohen too, because brilliant businessman, and I love that he took the stake, and hopefully, maybe I wonder if he'll do more with the company, or looking to do something else with the company. But his stake, maybe he'll put another stake in there and do something, because he knows how to run businesses. So, I mean, this company's fundamentals are horrible, but maybe he can do something with it longer term, if it's of interest to him.
Yeah, definitely a potential possibility.
Serious calls too. It's like I think 60 to 80 range for in the money. So he's definitely very, very long Bed Bath. So we'll see how that plays out.
A couple updates. So one of the reasons the market was selling off a little bit into the close was Biden was speaking. Biden signed, I think it was the Inflation Reduction Act, I want to say. Is that what it was called?
Yeah, there's another name for it too, but that one was one of them. That's one I used, so.
Yeah, something like that. Inflation Reduction Act. I haven't really dug into it, exactly what it's going to do, but basically it just means the government's going to print more money for most of what I can see and give it away to people. So, in fact, it might increase inflation. So, they might want to take a step back on the name, but we'll see what happens. Okay, we got, again, about 16 minutes, and then we're going to have Theta Warrior actually coming in here in about 16 minutes to chat with us about his Theta Warrior indicator, and also just to talk more like market stuff, talk more setups and different pieces like that. In the meantime, happy to keep it rolling a little bit around here. TSDR, I know we kind of got the initial insight from you. I would love to get a little bit more thoughts on setups for the week, other trade setups for the week. I know you were talking SE. SE got a little beat down today. I'm wondering if you're trying to take anything off of that. Just anything else you're watching.
Yeah, SE got smoked. I like Snow possibly here over, I think it was 167.30s. It's one that I'm watching. Got some SPY levels. Got some QQQ levels. I just went outside to do a little exercise. Let me take a look here. By look, I mean look inside my brain. Can't remember where Google closed, but Google's got a level around 122.30s. I'm looking for it to break. Amazon kind of had a very similar setup. Obviously, shorter term different setup. It had that level around, I think, 144 on Amazon. Saw a nice little break and run for a couple bucks on Amazon. I'm kind of looking for the same thing on Google over 122s, 122.30s. Let me try to think of a few more. Yeah, let me try to think of a few more off the top of my head, and I'll get back to you in a second.
Sure. No problem. Okay. Yeah, I mean, pretty open floor to anyone else who wants to pop in. Otherwise, we could talk maybe just a couple of these other pieces. Evan, did you dig into that bill at all and what's inside of it?
I haven't really dug too deep into it, but we've been having this for the last couple of weeks. So, like, anything, this is kind of one of those ones where, like, everyone would know what's happening. It's just kind of it really hitting and finally being signed. But also, by the way, Credit Suisse upgraded Apple to outperform from neutral with a $201 price target. Apparently, that's a street high price target, but I didn't see that. But yeah, the Credit Suisse just upgraded Apple. We'll see if it gets any movement off that.
Wolf.
Yeah.
So whoever does dive into it, I know a lot of the scuttlebutt on what they're really fearing is the fallout from all of these loans that they gave away referenced vehicles. So obviously a lot of those were not paid. I know they're terrified about that. They were projecting that could be a possible catalyst towards a recession like we had with the last one during the mortgage crisis. It's structured similarly. So, I mean, we don't really need to look into anything that Joe Biden does. We know that this is just an excuse to spread more money out over more avenues to try and earn some votes here into, midterm. So we'll see how it goes, but, probably a lot of that.
Got it.
Square, PayPal, AMD. There you go.
All right. See you guys. Have a good one. Thanks for having me on.
Absolutely. Appreciate that. Okay. Square, PayPal, AMD. Got that. We can come back to that in a second. Andrew?
Oh, yeah, I was just going to say, I'm not sure if you guys touched on this earlier, but do you guys think like some big hedge funds were like literally just like blowing up today? Because like I saw like Fubo was up huge at one point during the day. Vegas's Bed Bath & Beyond went crazy. That was awesome. And like I saw so many of those names. So, like I would have to think there's like some bearish hedge funds out there. Like they're just gone.
It's a good question. How would we know until we get the news, I guess?
Yeah, I guess the bodies have to float to the surface. We'll see.
Jesus. It's dark. But I hear. It's one way to go about it. Yeah, I mean, Michael, what do you think? You've kind of been around for a while. Have you seen?
No, I don't. Look, I think that I don't. Look, when the GameStop nonsense came out, and whatever it was now, year ago, 2 years ago, year and a half ago, I forget what it was, and everybody was standing on the hill with their pitchforks and their torches, and we're going to get the hedge funds. We're going to get them. We're going to show them they've been robbing us, and now we're getting back at them. And, the truth is most hedge funds are there to help endowments and to help public service and their retirement plans and all that stuff. So, it turns out, of course, that was, the more you dig into that, you scratch the surface on what was really going on. It was, certain hedge funds gaming other hedge funds, and that's what. And who was the real victims there? One big hedge fund went out of business, and a couple others took some scratches, and that was it. Then they went back to their normal shenanigans. So I don't think there were a lot of. I don't think you're going to see the landscape littered with bearish hedge funds because of what happened today in some of these meme stocks. It appears to be much more retail related. That's what I'm seeing. I could be wrong. Maybe tomorrow the headlines will be, in aggregate, 500 hedge funds lost $10 trillion. I doubt that that's what's going to be the case. In my opinion, and I am a crusty old curmudgeon, whenever I see things like happened with GameStop, and I'm not talking about the phenomenon of the GameStop squeeze. That was something I had never seen before. But with everybody leaning on and thinking that they're going to band together and put out the evil hedge funds and they've made money on us for years, so we're going to make money on them and all this stuff. It's just all nonsense and all gaslighting and manipulation. So I don't really think you're going to see a bunch of hedge funds get cracked open by what happened today in Bed Bath & Beyond. Yeah, maybe some of them were short. Maybe some of them were shorting on the way up too today, right? Maybe people were trying to get in on this and saying, oh, this isn't going to last, and maybe they're early. But, those are mark-to-market, the daily trials and tribulations of hedge funds, right? Like a lot of these guys I know people that work at some of these funds. A lot of people were short energy when oil was screaming higher too, right? They were shorting energy because that's their job, right? Their job is to look for mispricings and look for imbalances and look to get on board that. But that's, in my opinion, that's just business as usual. So I don't see anything, in my opinion, out of the ordinary going on today. And what I'm saying is, obviously, these moves were out of the ordinary, that's for sure. But what I mean is, I don't think that, like I said, that they're back to putting these hedge funds out of business or whatever the claims are going to be. But that's just my opinion.
Okay, good points. Andrew, any thoughts on that?
I think the man makes a lot of good points. Yeah, I think it's I don't know. I mean, these moves, like, I just love being a part of them. Like, this is like one of my favorite parts about just like trading. Like, you just see so many wild things. Like, I don't think I've ever seen, like, during GameStop they had, like, it was like GameStop and maybe a few others. But like today there was like multiple stocks. Like Fubo at one point was up 80%. So I don't know. I just marvel at this stuff. I find it very cool. But again, like to my point earlier, like usually you start to see this stuff towards the end of a rally. Typically that doesn't happen like, at the very beginning. So we'll see.
Yeah, I absolutely agree that this is more ending action than beginning action. That's for sure. And maybe we'll look back and we'll say, hey, remember Wolf, August 16th? We said, hey, this is probably the end of the move, and now look, we're back down at new lows. But like I said earlier, I don't think necessarily that's going to happen. I'm just saying, this will be a really nice day to look back in hindsight, if indeed this is this kind of action was signaling the end of the move. Something else also, just to add a caveat to that, while this is the type of action that we do see at the end of the moves, it doesn't mean it has to be just one day, right? Maybe we see this type of action for the rest of the summer. Maybe we see, this type of, and maybe not as extreme as it was today with whatever, half a dozen stocks or whatever it was, but maybe we start to see these again. And every week, maybe we're like, oh, last week it was these stocks, this week it's these stocks. Maybe we start to see that. So, excuse me, while, this is the type of action that could be signaling the end of this speculative leg up. It doesn't mean it necessarily has to just be one day of it.
Yeah, Matt?
I agree. I want to say Mike got some good points. And, the GameStop AMC phenomenon, I'll be honest, I think if you took every single retail trader you pick your favorite Reddit that talked about that stuff, I don't think the net sum of everybody's trading accounts together equaled 1/10 of the medium-sized hedge fund they were trading against. If you put every person together that hodled a GameStop or AMC, I know like a lot of that hype, it seemed like one fund squeezing another. And then, if you start looking at things like StockTwits or some of the other feeds where you can actually watch, you were seeing accounts being created and posting about GameStop. Like literally every minute, a new account would just be created and talk about GameStop. And you could turn the feed on and you would see like 50 to 100 accounts. Their entire sole purpose is to be created, talk about GameStop. I think that's one of the biggest social experiments we've ever experienced in Wall Street. I think the whole thing was just one clever fund finding a modern way to squeeze out another one. I don't think any retail power has any power to squeeze out any of these firms, and I think that's hilarious. He's talking about walking around with pitchforks, because I think that narrative was believed by a handful of people, but I think most of the people that participated in it weren't actually really buying those stocks. And and just like any other the Cardinal of Wall Street is, if you want to buy something at a higher price, they'll definitely sell it to you. So people are going to buy GameStop at $500. There is no lack of people holding that stuff ready to get to take your money for that. And I don't think that a lot of what we're seeing is going to be that. I think a lot of the pop stocks, I hate to say kids because it's adults and kids mixed in with that crowd. I would say like more like non-experienced investors, let's just say that, to believe that coordinated power and attack like that could actually topple some of this big institutional money. They're hedged against it. They're not going to be super exposed. We're going to squeeze them to insolvency. Maybe, like you said, one firm might get a scratch or something. That's basically it. They probably are laughing at the whole idea that that's really what's going on. To me, a lot of the plays we're seeing are just real, people getting into them for real reasons, like, Bed Bath and Beyond. Consumer discretionary is a huge reason for that to be as popular as it is. I mean, inflation numbers are coming down. There's a higher probability somebody's going to go and buy a fucking toaster and a Roomba this week than, last month. So that's why that stock is going to be huge. And anybody with, half their merits in this business understood that when inflation comes down, that was the play to take. And that was my call last week as well. So I like reading it though, Michael. It's really funny. Like you hear a lot of times, oh yeah, we're going to band together and take out the hedge funds. And it's just a big farce. It's not at all what's going on. So.
Right. And they get a bad rap for what, for what reason? It's like, when I was coming up, when I was day trading, 99, whatever, 2000, whatever it was the evil market makers. Oh, the market makers, they're setting traps and they're running stops and they're out to kill the small retail investor. And somebody told me who was a market maker said, no, we're just doing our job. We're trying to survive. We're trying to keep our jobs. We have orders to fill, right? They don't, at the morning meeting at 7:45 in the morning at Bank of America or wherever, Pickett, Goldman, wherever, they don't sit there and go, okay, they don't have a big whiteboard up and go, okay, let's see if we could take Wolf out today. He's a retail trader. Let's gang up against Wolf. And that's not what they do. They have orders. They have orders from institutional flow that they have to get the best available prices on, or this institution is going to go somewhere else and get their business done somewhere else. That's what they're going to do. They're doing a job. So again, to gang up against the institutions and the hedge funds is silly. Without their liquidity, we would be done. The spreads would be a mile wide, like the option spreads, the common spreads, the future spreads. Without institutional money, they would be a mile wide. You wouldn't be able to make a nickel in this market. So, again, I don't want to put them up on a pedestal or a big platform that we should worship them. But the hatred of them, I just never understood it. It's just unfounded.
When you say like anybody that loses, it's always got to be somebody else's fault. It's an easy target to always believe that there's always a conspiracy controlling the other side of your loss there's a fallacy to that. I forgot what it's called, but basically, it's never your fault, and that's how people kind of treat investing. What's really funny, if anybody ever thought about it, the institutions that get paid per trade that is made have every incentive to keep you in the game, not knock you out. They'd rather whittle your account down 2 pennies on the dollar at a time, getting their maker taker fees all day long by keeping the market flat and liquid, because they make more money the more people that are playing the game, the more people that survive the game. So there's no incentive to squeeze out one person. So they have a margin call that they made 2 cents on the dollar it took to close the position. They'd rather keep you in the market. If they were even driven incentive-wise to do something shady, it's to keep you liquid and slowly have you lose inch by inch over decades of time, because they'd make more money if there was a conspiracy anyways.
Right. There's the famous saying, you can shear a sheep many times, but you could skin it only once, right? So they'd rather just keep shearing it. And the truth is, if it's a slow bleed and you're losing a little bit at a time, because look, let's face facts. Most traders lose money, right? And it's usually because of emotional decisions. It's usually because they abandon their risk management. Like, today, Wolf was beside himself because he stopped out of those SPY calls. And it wound up doubling and more. It went more than double, whatever, 150% from where he got out. Well, what happens if he just would have held his nose and said, you know what, from now on, I'm not using stops? Well, eventually we would lose him because he would be off doing something else, right? He would be selling houses or doing another. He wouldn't be trading anymore because eventually he would lose all his money if he just abandoned his stops. So it's the same thing. That's why most people are washed out of this business, because they don't have the discipline to understand sometimes you're the bug and sometimes you're the windshield, right? That's it. And when you're the bug, you want to get the least amount of damage as possible, right? You can't make it back tomorrow if you lose it all today. That's the thing, right? That's the way it is. So you got to take your losses, you got to take your lumps, and you got to move on. And as far as blaming somebody else, let me tell you something. That's not just in investing. That's in life. In everything in life, it's always someone else's fault. So why wouldn't it be in investing also?
Wise words from a wise man.
Sometimes you're the bug, sometimes you're the windshield. I love it.
Love it. Yep.
You got any more?
Hella
Keep them coming.
Sometimes you're the hydrant, sometimes you're the dog.
I'm picking up what you're putting down. All right, I love it. A lot of quotes in here. Andrew with "Let the bodies float to the top," the bug in the windshield. It's good stuff. Okay, really enjoyed the Power Hour. Love the market analysis here.